Hello everyone, a warm welcome to Stock Spy. Today we are analyzing if it's worth buying Palantir at current levels. Palantir's price to earnings is sky high. Critics call it expensive, risky, and even a bubble. But here is the thing, that story, it isn't new. In this video, I'm going to compare Palantir with historic high PE success stories like Amazon, Tesla, and Netflix. They were in the same position at one point of time. And today, those who believed in them didn't just make money, they made fortunes. So what exactly is a PE? So PE shows how much investors pay for $1 of earnings. And the S&P average here is around 20x. What for Palantir? It's over 500x. 15 times the average. Does that mean it's doomed? Maybe. Or maybe it means that the market sees something the spreadsheets doesn't. Let's go back to 2013 when Amazon's PE hit an astronomical 1000x. Critics said it's just a bookstore with no profits, but Amazon was architecting a global retail and tech empire. Fast forward to today. Its earnings caught up, the PE normalized, and the stock still soared. Had you invested back then in the top of the PE, you would have still soared 1400%. This is not speculative math. This is what happened in real life. Now let's look at Tesla. In 2019, their PE soared past 1000x. Doubters said it was the most overvalued automaker ever. Probably was. But Tesla wasn't just a car company. It was battery, AI, and energy business all into one. Once the production scaled, profitability followed. Earnings catapulted. Had you invested back then in the top of the PE, your stock would have still been up by 40%. Not bad comparing to the recent performance. That's not just hype, it's a historical fact. Now, what about Netflix? Netflix lived and doubled and tripled PEs for years, sometimes even above 500x. Investors were betting on streaming's future before anyone believed in it. Had you put $100 in Netflix during its peak, the stake would now be about $4,500. That's a staggering 4,400% increase. That's what conviction in transformative storytelling looks like. These peaks aren't just hypes. They are market's belief in future dominance. And in all three cases, the winners were in shorts. They were the investors, the believers. Palantir stands where they once stood. High PE skepticism and massive opportunity. Its tech powers intelligence, defense, Fortune 500 decisions, and it's a profitable company. It isn't just a tool, it's infrastructure. If history is to repeat itself, the valuation that you see today could be tomorrow's bargain. Yes, there are some high PE darlings that flinged out, like Zoom, Peloton, 3D systems, etc. The future they promised didn't arrive. But Palantir has a different model. It's sticky. It's deeply embedded, expanding in the commercial world and riding the AI wave. Not leading, but building the tracks. Now, Amazon took over a decade to grow into its valuation. Tesla did almost the same. Netflix, it took even longer. So, a 1 year lens, if you're looking at it at a 1 year lens, you see just the risks. But if you have these 10-year lenses, you might be able to see the opportunity. High PE stocks looks like empty lots, not the skyscraper. But if you see this future, you bet on the build. Palantir is building, and if history serves as a guide, The question isn't if the PE will fall, it is if the earnings will rise to meet it. And that's where the magic happens. Next in the series, I'll explore how Palantir stack up against the stocks that flame down and how they are different. So stay tuned for more. Thanks a lot for watching.